once you can get your points of interest correctly, then you can get profits correct. Point of interest is equivalent to making profit in smart money concept. This is what I'm teaching you in this video. So this video is all about showing you how to pick and select the right point of interest, and I'm going to use this diagram to explain to you the various types of points of interest, and I'm going to show you by the end of this video the best point of interest that you should start using. So let's start with the type A points of interest. So as you could see, this is a bearish trend. Price kept going to the downside. So obviously we know that we want to sell, right? So we have our break of structure here. Now, most people, they think that once price breaks structure, the next thing for them to do is to pick any order block or any supply zones or demand zone to take their entries. No, that's not correct. All right. So most of you, this is what you do. You might want to pick this as your point of interest. All right. Now, most times it's going to fail. 95% of the time, this point of interest here is going to fail. Come with me on the journey as I show you the best and how to operate with this. So in this case, this is a no profitability point of interest. I wouldn't even want to look at it twice because this is obviously liquidity right here. So we have this as liquidity, and what happens? Liquidity is a fuel for the market. So when price comes, price will obviously have to take this liquidity before continuing to the downside. All right. So where exactly is the high point of interest in this case? The high point of interest in this case is this particular one right there. So exactly once price comes, price does something like this, takes this high. We are still waiting. Remember, this becomes our high probability point of interest. There are two things that makes this. Let me show you now. There are two things that makes this zone a high probability order block. The first is that it has inducement below it. And where's the inducement below it? This is the inducement below it. And secondly, it swept liquidity. So the point of interest that swept liquidity is a high probability point of interest, and the point of interest that has liquidity below it is a high probability point of interest. Of course, there are other variations which I'm going to show us as we move on. So let's go to the type B bar diagram. So before we go to the type B bar diagram, did I just say bar? Before we go to the type B bar diagram, why am I saying the same thing now? Before we go to the type B diagram, the next thing that we must pay attention to is that is there volume in the market. So it doesn't matter whether when price is going up, is going to go with full momentum. That's not the most important thing. The most important thing is that you already know the direction of the trend. In case you don't understand that and you want to know, check my last video where I talked about a few things about it. Okay, so the next thing we want to do is this. After we've identified our direction, we need to identify our point of inducement. Okay, so of course this becomes a valid inducement, and that's because this low was taken. So you might want to check it out, my video on minor and major inducement, to understand everything about this. But today we're talking strictly about point of interest. So immediately this happens, price breaks structure, takes the inducement, which in this case broke this swing high or pivot point. So the next zone is our high probability order block, high probability point of interest. All right, so let's go to diagram, the next diagram, which is the type B diagram, and I'm going to show you exactly what to do in this case. So why is it that in the diagram A, in the type A, we are not taking our entry here? Why? One of the reasons is because no liquidity was taken. Price didn't take liquidity, which means this becomes the liquidity. So if you are not able to identify liquidity in the market, of course, most likely you are going to become the liquidity. That's a fact. So on this particular diagram, as you could see, of course, now this is where you really need to pay attention. Like the video in case you have not done that yet, and don't hesitate to subscribe as well. Now, this is very important. After price breaks structure to the downside, which we have seen right here, the next thing that we want to pay attention to is that where exactly is our liquidity. Take note, two things here which you must not have seen. I'm going to show you right now. Now, amongst these two, this one and this one, which one is the highest probability point of interest, or POI? This one, no, this is not it. This is the correct point of interest. And why is that? Let me show you why it is this particular one instead of this one. The first thing is we have identified, of course, our break of structure, which is our trend direction. And secondly, we need to look for inducement. Of course, we're not talking about inducement in this video. We're talking about point of interest. Now, what do we pick? We now see this, right? So what happened? Price took liquidity. Make sure you are taking note. Price took liquidity from this high, which means that price might be willing to continue to the downside and push to our initial or intended direction. So this makes this zone high probability points of interest. Now let me show you something real quick. Immediately this happened, price break structure, we are willing to take this. Now take note, if you notice there is no inducement, between this zone that we marked as high probability. And I've told us previously in type A that you will need inducement to get high probability point of interest. This is why we must pay attention, right? So you really need to pay attention. Possibly watch the video for the second time and you are going to understand clearer and better. Watch it again, okay? Now in this particular case, we can see that this was actually a sweep of liquidity. So we had a sweep of liquidity right there, which means price swept this high. And also take note that it did not even mitigate any zone or any pivot point, but price did what? Swept liquidity and continue to the intended direction. So when that happens, then we can actually take our entries without inducement. Do you understand? Pay attention, rewind and watch what I just said now. That's very important. It's a very key information. When price sweeps liquidity, I repeat, when price sweeps liquidity, we don't need inducement to look for our entry. All we need is a valid point of interest. And in this case, where is our valid point of interest? This becomes our valid point of interest. Okay, you might say, okay, what about this? When price comes, takes this low, decides to come here, come to this high, I'm not interested in this zone. This zone becomes a low probability order block or point of interest, as the case may be. But this is where most of you, every time, once you see break of structure, you always want to take your trade from the extreme. No, you are getting it wrong. Once price takes out these strong points of interest, there is higher probability that, of course, price might continue, which makes a break of structure. Price forms an inducement pattern. An inducement pattern takes that, mitigates a zone here, and continue to the upside. And this is where most of you get it wrong, and you must understand the dynamics of price movement. Do you understand this? So what happened if this, let's say we had something like this? Okay, let's assume we had something like this, and sorry about that. Let's assume we have like this. Okay, let's say we have something like this. So where is our high probability point of interest? Where's our high probability point? If you notice, amongst the two moves, which is first one, second one, none of these two actually have what? None of these two actually have a liquidity sweep. There was no liquidity that was swept from any of these two, which means that these zones are vulnerable to be taken. So if price comes like this, price might likely take the two. No, not accurate. Pay attention. So I'm going to show you this exact example in one of the diagram, probably type D diagram. All right, so let's continue. So in this case, let me just explain this before we move on. Once this happens, what we need to do is this. We must wait for inducement. So where becomes our inducement? This one. So this whole zone will be violated. This is our liquidity. So this becomes automatically a strong point of interest for us. So we look for entries there and trade to the intended direction. I hope you're understanding this. Basically, once you are able to get this correctly, is going to shift the way you look at the charts and the way you trade generally. So let's go to another example. Pay attention. So this is the type C. Before we go to this is another example. Okay, so this is type C example. This is quite different from the two which I just explained earlier. So we must pay attention to get the things right. So price kept pushing to the downside, broke of structure, which means our trend direction is confirmed. We are bearish. So where is our actual point of interest? Now, have you ever been in a situation whereby you are waiting for price to come and take or mitigate your point of interest, but unfortunately price comes and refuse to get there, maybe came down here and react from here and continue to the downside? Have you ever been that? Of course, I have been there many times, and most times that was literally before I understood this. But now that it's very, very clear, and let me show you exactly how you can do that. Now, most times, now look at that. The same example, just like type A now, but there is a variation here. This zone is not a high probability point of interest. Can you spot it out? If you can spot it out, just comment it below. I give you 5 seconds. 1, 2, 3, 4, 5. All right. So I just hope you got it. So the reason is there was no liquidity sweep, right? So there was no liquidity sweep. So this makes this zone a low probability point of interest. Now, what makes it a high probability point of interest is that if it has inducement below it. Of course, this is an inducement. We have a break of structure. Most of you will now say, oh, this, it has fair value gap, it has imbalance, so let me look for my sales. No, that's not it. The fact that it has imbalance does not make it valid. The fact that it has a lot of volume does not make it valid. I know that most ICT students we want to disagree with, but I'm telling you, as one who have about 5 years plus experience in this, I know exactly what I'm talking about. All right. So basically, we want to wait for price to take our inducement or sweep liquidity, as the case may be. So that's exactly what happened. Price comes, sweep liquidity, and decide to push to the downside. However, take note, when this happened, price never mitigated its supply zone. Price never mitigated an order block. Okay, whatever you want to call it, price never mitigated a valid of interest. However, price swept a liquidity in form of inducement. In this case, this a major or minor inducement? If you watch my last video, this is obviously a minor inducement. Wrong. This is a major inducement. Okay, now basically after price have taken that, the next thing we want to wait for is lower time frame confirmations. And what are the confirmations are we looking for on lower time? Exactly the same thing I'm showing you on this various type of point of interest is the same thing you look for, especially the inducement. You must understand both minor and major inducement. Check the video description. I'm going to drop the link to that video so that you can learn and understand it better. So let's go to the last example so that we can go to the chart probably, so that you can learn a whole lot about this. All right. So what happens if price does something like this? So this is type D. If you notice, it is similar to the last example I gave, but let me show and share this with you. Two things is happening right now. The first is that we already have what? We already have this as a break of structure. Okay, so lastly, with this type D example, the first thing we must pay attention to is this. This is quite simple. All right. So after the break of structure, look at this. This zone was the zone we would have taken trade from, right? But as you can see, there's no inducement taken. So we patiently wait, and we are not interested in doing anything with that particular zone. So therefore, what do? We simply wait for price to move. Look at the momentum that price used to go to the upside. Momentum is really huge, right? Yes. So in this case, wait patiently. We are not taking this. This is not, even though this is an inducement. Of course, if this happen, price comes and take this high, this inducement, and gives us lower time frame confirmation. So just like the type C example, then we can look for selling opportunity. Otherwise, wait for price to take out this whole zone. So that's why you mark your first point of interest, it fails. You mark the second, it fails. Most at times you even mark the third, it fails. Why? This is the simple reason, right? So once you understand these concepts, I tell you the truth, your point of interest trading, your smart money concept trading will actually skyrocket. So let me show you few chart examples so that we can call it a day. So the first thing that I want to share with you here is this. So let's start from probably somewhere here. Let's use this location. All right. So it's the same thing with any chart, whether you are buying, you are selling, whatever you are. Okay. So I can even show you different example, both buy and sell in this particular chart. All right. It's not different. So let me start with probably buying opportunities. Okay. So first we have what this as our break of structure, which is our base point for identifying our direction. So I'm not using this to check the trend, whether a trend is bullish or not, but I'm just using this to give you an example on how you can pick the right point of interest. Do you understand? So after the break of structure, this is what you now draw your your zone, because this becomes a valid zone. Wrong, this is wrong. You don't use this. You simply wait for price to take out the inducement. But where is our next zone? So this is an order flow. All right. So I talked about that flow in my other channel. I also want to check the video description. I will link you. All right. So this particular order flow, let's change this real quick. Right. Okay. So this particular order flow, let's mark our inducement, because this becomes our inducement. So once we are able to identify this, we can now look for our selling opportunity. Do you understand? It's quite simple. Okay. So once we have a break of structure, we look for our inducement. This becomes our inducement. And where next is our zone? This becomes our point of in. All right. So what exactly happened? Price came, reacted, give us opportunity, and broke structure again. So we do the same thing after the break of structure. What are we looking at? So if I may ask, what type or point of interest is this? Is this type A, type B, type C, type D? All right. So this particular type of inducement is, see this, break. So this simply is what the type A inducement, point of interest rather. Okay. So after the break of structure, what are we looking for? Remember, we're looking for inducement. So where is our inducement? This is our inducement. So where exactly is our point of interest in this case? Take note, the whole order flow, have been mitigated, right? So we had this, price comes down. So probably this is lower time frame. As you can see, that order flow have been mitigated. Price push up, this mitigated this zone. Price push up, this mitigated this. So the whole order flow here have been mitigated. However, though order flow have been mitigated, this obviously is the extreme. And now pick our order block. And where is our order block? This one becomes our order block. Look at this wick, the one that swept the previous candle, right? So we can literally pull that on, and that's exactly what price came react from. Yeah, let me show you. Now you might say, oh, because this is an insight, right? Of course, I'm using insight so that I can teach you. All right. But you want to see me trade this live, join my free Telegram channel. Check video description below, right? You'll see previous results. I literally call my trades before they happen, and you will see me trade these things live, right? So I'm not just teaching you things that I don't practice. Okay. So we have the same thing here. So probably this would have given us another opportunity. And of course, I wouldn't target 1 to 9, right? I'm comfortable with my 1 to 3 risk to reward ratio, and I'm good, right? So of course this one would have because this is a very nice place to take partials or break even, right? So that's just an example. Let me show you one more example, maybe then we can call it a day. Okay. So let's say we are now selling. All right. As you can see, you can use this both buy and sell. All right. Once you understand this, it's a game changer, guys. Once you grasp, it's a game changer. Okay. So we have what this as our break of structure to the downside. And what else are we looking out for? We need to mark out our point of interest. But to mark out your point of interest, you must understand the minor and major inducement. So in this case, this becomes our point of interest. Very wrong, right? But most of you, this is what you do. Is it not true? And look at the largeness of the candle, because it is a deliberate sweep of liquidity. It's a deliberate sweep. So if you don't understand this, you keep setting limit orders and they keep getting violated every time. All right. So understand this. This is very, very powerful. So this becomes what? Our inducement. So after the inducement, what I will look, this becomes what? Our inducement. After the inducement, what I will look out for? We're looking out for our point of interest. Okay. So where is our point of interest? This becomes our point of course, this whole zone. Take note, right? This whole zone is our order flow. As you can see, it is very large, right? This whole zone is our order flow. This is our order flow, but as you can see, it's very large. So in this case, what we do is we refine this. And how do we refine this? Some of you say, oh, this is no. You want to learn it, check video description as well, all right, for the minor and major inducement video. So this becomes our refinement, and of course you can still refine it further into this. Okay, it is when we go to lower time frame, you can see this, what I'm showing you clearly, right? Because on the lower time frame, we are going to see something like this inside this zone. So on the lower time frame, this is exactly what we see, something like this. Like this is something like this, right? Exactly like this, something like this. This is what we see on the lower time. Do you understand? So as a result, you see we can now pick this as our point of interest, and that's how I used to catch sniper entries. And you can start catching sniper entries once you understand this trade. Of course, there are other things to it which I talk about on the channel, and this is the reason why you should actually subscribe if you really want to learn more. Okay, I also have another channel where I talked about same thing, talk about various method of approaching. Do well to check them out, and I have multiple videos on this, and probably trend directions and the rest. All right, so check video description in case you want to join the Kome Academy, which is my mentorship. Check video description as well, and to join the Kome Signal service, also check the video description, right? And make a lot of money together. Let's see you on the inside. Shalom.